I want to talk first about this concept of the overhaul in Wall Street research. There have been these new rules that have gone into effect that force investors to pay for the research. How much does it cost?
Well, the biggest banks presumably could charge the least, but for JP Morgan and Citigroup, that's about $10,000. For Morgan Stanley, that's $25,000 for 10 logins. Goldman, that's for 4 logins.
For a year.
Same price. Yes. So it's not cheap, but that's still cheaper than what the smaller firms can offer. So there's a bit of a debate going on whether the biggest banks can subsidize their research costs through other parts of the bank.
At the same time, there was a chart that we had showed the head count in research,
Yeah.
which has really gone down since MiFID II.
Yeah, actually, the 12 top investment banks employed 3,700 people in cash equities research globally as of the first quarter. That's down 14% from 5 years earlier. So people have lost their jobs. Although, Sonali, based on what some people were saying, which is that this would have been a bloodbath, perhaps is it less than people thought it would be?
Well, trying to be optimistic on a Monday morning, right?
I know, I'm trying. I'm doing my best.
Well, the thing that's interesting about it is this has also pushed some people out of the industry also. We've seen a lot of people move into hedge fund jobs, investor relations jobs at firms, just because the pressure certainly has been on and the writing has been on the wall for a number of years now.
The real question is this going to make trading better, more informed? Because when the advocates of MiFID II said this will improve the information flow, and that's the question in my mind.
Well, that's exactly it. I think so far there's a lot of criticism that this is not working out as planned. Somebody quoted in the story that's out today is Colin McGranahan, the head of research at Sanford Bernstein, of course, one of the smaller firms, that's saying that this is subsidizing the other parts of the bank.
Although there was a quote by a fund manager saying, this actually gives us more time. We don't get as many calls. We can actually do our work. Just saying.
Well, that's like hedge funds hiring more analysts.
There you go.